Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the mutual fund data for the month of January is now out. The net investments in equity and the equity-linked schemes have jumped 71.8% from the previous month to 12,546 crores, and that's for the month of January. The SIP contributions have also grown to 13,856 crores in January, which is again a record high. Now, to share more insights into the mutual fund trends in the month of January, I have with me joining in Mr. NS Venkatesh. He's the Chief Executive at AMFI. Welcome and good afternoon, sir, and thank you so much for taking the time out for discussion on Business Today TV. Well, a solid set of data yet again. So, encouraging signs, equity inflows have risen in January by a large margin. First up, if you could help all our viewers understand what has really buoyed the sentiment.
Well, essentially, the investors, retail investors have reposed faith in the mutual fund as an investment vehicle, and they have found that the equity schemes are the best place to be in, and they have continued to put in money into the equity schemes. In the equity schemes, if you look at it, they have put money more in the net inflows are more in the small cap than the large cap. The small cap has corrected a lot in the past, so the valuations are attractive at this particular point of time. So people have invested into the small cap funds. If you look at the SIP numbers, the SIP numbers are reasonably good at 13,856 crores. It is around 280 crores more than last month. It's on an upward trend and it's an all-time high. So
Sure.
we believe that essentially the markets are also doing now reasonably well. Equity markets are doing reasonably well and giving a good return. So the investors have chosen to come into the equity schemes.
Right. Now, more importantly, will the momentum in the equity schemes really continue? Because, we've been off late hearing the views on preference of the debt funds because of the increasing rate hike cycle and the more attractive rates getting there, one can attract from the debt funds as well. So, will the momentum in equity schemes continue?
We believe that the equity schemes momentum will be on an uptrend only. We because we believe that the budget has been a good budget. It is there for everybody, and in the budget capex is around 3 lakh crores, which they have done,
Yeah.
and the revenue deficit is at around 2.9% and fiscal deficit at 5.9%. I think it's a wonderful budget where it is a growth oriented budget. So we believe that economy will grow. If economy grows, equity is the right place to be in. So we will find that the equity schemes will be doing much better. On the debt schemes, as you have alluded to, on the debt schemes, because we are on an interest rate tightening cycle, essentially the interest rates are being hiked, including yesterday in the monetary policy, 25 basis point hike had happened. So if we are looking at it from that angle, the investment into the long duration, medium duration, and all those schemes will take a little bit of a pause at this particular point of time. And once the interest rate peaks, then people will again come back into the debt schemes. So I believe
Okay.
from mid-April you will see more flows coming back into the debt schemes.
Right. Since you talked about the budget, I wanted to take your view. The major changes have come into the personal tax regime, with the government looking at making the new tax regime with the changes more attractive. Most of the tax experts do believe that a large portion of the taxpayers who are still in the old tax regime would perhaps be now more attracted to actually shift towards the new tax regime, which will eventually be the default regime as well. But because of the removal of deductions and the exemptions, all of those investors who were forced to invest in mutual funds also, like the ELSS schemes also, will there be any change right there? Or because of the culture that they have imagined, they have seen the kind of savings and the returns that they have seen, will they continue to grow despite being in the new tax regime?
The ELSS investments, if it is being put only for the deduction under ATC, then and if you are moving into a new tax regime in the sense that the new where there is no deductions allowable, there you could see a little bit of a challenge. But I would say that even now people with the old schemes are still there, where the deductions are allowed, and the ELSS schemes are giving reasonably good returns because it has a lock-in of a 3 years period. So I think you will see a balanced flow into the ELSS scheme.
Okay, but is there any quantum that you have imagined because of this? What could get affected?
Not much. I don't see much getting affected at this particular point of time. Maybe a couple of years down the line, then maybe we'll have to see when the major portion of the people move into the new tax regime, then maybe we'll have to see this.
Right. If I'm not mistaken, I think the inflows have actually continued for 23 straight months in the month of January, and that's a remarkable trend. What I want to understand from you is what can help this trend to sustain with two major triggers, budget and the RBI policy, even the Fed, rate hikes now behind us. What can really help all the investors to continue to put their focus in the markets and the equity investments, even though the markets are pretty, volatile at this current juncture?
If we look at it, the markets will look at the earnings potential of those corporates, and then take a view as to how much is the earnings that percentage that they can expect, and from there they will start putting money into the equity schemes. So we are seeing that the corporate earnings are all good corporate earnings. So to that much extent, the markets are positive at this particular point of time. So we believe that the trend of uptrend of investment into the equity mutual funds will continue for at least another 6 months.
Okay. SIP flows also, like you pointed out, they are at record high levels, 13,856 crores. That's remarkable. I think for the 3-4 consecutive months, we have been seeing these record numbers really being hit. What is the outlook here? Where do you see this number growing to?
In the short term, it will cross the 14,000 crores by March, and we should end the next financial year at least crossing the 15,000 crore.
Okay, understood. So that's going to be a strong one too. One more comment on the Adani group of stocks. We've seen this entire development taking place, considerable free fall in most of the stocks, wealth erosion for about 7-8 days, and then a bounce because of some encouraging signs of the prepayment of loans and the earnings as well. But have you seen any action from any of the mutual fund schemes in January having exposure to the Adani group of stocks? Any sense that you have found?
No, but in our case, if you look at it, the exposure is minuscule,
Okay.
very, very minuscule. It is negligible, I would say. So to that much extent, the mutual funds exposure to that group, whatever you are referring to, is very minuscule. So they have done the risk management principles properly.
Okay. You were talking about the category-wise trends as well, that small caps have witnessed the highest investment this time around, but large cap funds, in fact, saw the least this time around. Is that trend likely to continue going forward too?
I believe so. I believe that the uptrend will continue.
Okay. And what about the liquid funds which have displayed outflows for the second straight month, and also the credit risk fund which have witnessed outflows for the 14th straight month? Why is that, and what is the outlook going forward here too?
Liquid funds is essentially a treasury management fund, in the sense that the corporates use the liquid fund to manage their treasury. So you will see in some months it is negative inflow, in some months it is positive inflow. Especially in the quarter ends, you will see negative inflows, net inflows happening, because they would like to pay their advance tax, and in respect of banks, they would like to manage their capital adequacy. So in the quarter ends, you will see that. In some other odd months, you will definitely see, depending upon the corporate's cash flow requirement, they will withdraw the money. So that is not a matter of major concern. In respect of credit risk fund, credit risk definitely at this particular point of time, there is no credit defaults or anything seen in the horizon, because all the corporates have managed their business very well. So there is absolutely no default scenario at all. So what is happening in the credit risk fund is the interest rate risk, which is getting managed, because it's a long duration fund. So naturally, people are managing the long duration fund by taking the net outflow at this particular point of time and waiting for the rates to peak. Otherwise, there's no credit concerns at all at this particular point of time.
Okay. Any trends that you can share with our viewers as far as the passive funds flows are concerned in January?
So we are getting the adequate inflows. So we believe that the mutual fund industry will continue to perform over the next financial year.
Okay, and the assets under management, I think there has been a slight dip right there from 39.88 lakh crore rupees in the previous month to 39.62 lakh crores. Is that an aberration of just 1 month, or is that something that you're keeping an eye out on now?
It is relating to the market movement. As on January 31st, the market was a little bit lower. So that gets into the valuation of the NAV valuation of the fund. So that is where you are seeing a little bit of a drop there. But it is not much of a concern. Once the market starts picking up, you will actually see the AUMs also growing. In addition to the net inflows, the valuation flows also will get reflected.
All right. Well, on that note, thank you so much, Mr. Venkatesh, for sharing with us all those insights from the monthly data of January. And here's hoping to do continued interactions with you on a monthly basis whenever this data comes out. All the very best to you going forward from here too. Thank you very much for being with us.
Thank you. Thank you so much.
If you like the video, do like, comment, share and subscribe.